You were there when no one else was there for me. You were there, that's all I needed you to be.
Hello traders, today we want to tackle breaker blocks, both bearish and bullish breaker blocks. So on the chart is our current gold XAUUSD, and it's currently trading above let me see, it's currently trading above 30.25 of gold. Yeah, so what is a breaker block? A breaker block in simple terms means a failed order block. And how do you know an order block has failed? We normally expect an order block to be respected by price, or we expect the order block to be rejected, to reject the price. Okay, so if the market is moving towards an order block, we expect a repulsion or rejection of the price towards the order block. Yeah, so if that one fails and that order block is broken, the market goes through it and below it, we call that a breaker block. So this was an order block. Let me just redraw it. Yeah, so we had an order block till here. So till this far, we had a beautiful order block. So we expected, as the market was coming down, we expected it to get rejection from the order block. So if I extend my order block a little bit, you see we expected the market to touch somewhere in or at the top of the order block and get rejected upwards. Okay, so that failed, and you see the market drove through the order block, and it's currently coming back into the order block. So we need to understand which type of the breaker blocks we should expect in the market. So this one is a bearish breaker block. And why? Bearish breaker blocks are failed bullish order blocks. So I think you should write that down. So a bearish, copy paste. If you write a bearish OB is a failed bullish, a bearish breaker block, a bearish breaker block BB, a bearish breaker block is a failed bullish order block. A bearish breaker block is a failed bullish order block, and the opposite applies to the bullish breaker block. So let's handle the bearish breaker block. So after it has been broken and it has fulfilled the characteristics of a bearish breaker block, now we need to know when to trade the bearish breaker block. When do you trade and how do you trade the bearish breaker block? Yeah, so what you want to look for before you do anything is that you are not trading unconfirmed market conditions. You have to trade a confirmed market condition. And in our case, you should be very, very much aware of the shape and structure that the market is showing. And that brings in a little bit of ICT in our structure today. So if you have a look at this market, you should be able to see something like this. Something like this. So if your eyes are wide open, you should be able to see an imminent head and shoulder. Head and shoulder, where we have this as our shoulder, head, and an expected shoulder. So there are many people who have seen this bearish breaker block right here. So what they want to do is to place a trade right in and expect the market to sell. But when you incorporate ICT and SMC, you realize that, well, the bearish broker has been confirmed, but could there be any other hidden market structures that I need to establish, or that the market needs to establish before any new move? Then if you draw this, you realize an imminent head and shoulder is up next, and that is where your target should be based. And that means you just bring a straight line over there. That's where the shoulders meet. So if you want to trade this market, you want to wait. If you want to trade early, you must ensure that your stop loss is above this point. Your stop loss is around this point if you want to rush in and trade. But if you want to wait and trade correctly, you wait for the market to get to around this point and start showing bearish reversal candle patterns. Then you enter trade and make a beautiful entry, keeping your stop loss right there. You ensure that your stop loss is not going past that point till ratio of 2 is okay, but this one normally takes some really good ratio. But I always advise you to take a maximum of ratio of 2 to stay in the game. Now 1.7 to 2 ratio is a good one. So you want to wait for the market to get here and give you a reversal candle pattern, get in at around this point, then stay in the trade until the ratio 2.0 or 1.7 is okay. So that's one beautiful way of trading a bearish breaker. That's very, very, very sniper. Let's see if you can find a bullish breaker. So a bullish breaker, we're gonna have to look for a bearish order block. A bearish order block. We really need to look for that down here. Okay, I think I've got it. So you have to look for a bearish order block. Like in this case, we have this as our bearish order block. Yeah, a bearish order block. And the market comes and rises above the order block. So what we expected is that the market would come and get rejected here and go down. So this is where manipulation normally happens sometimes. You see people are like, oh, okay, this is an almost equal top, and there was a nice bearish candle and a small bullish and another big bearish, and people entered sell, only to realize that this was a bearish breaker, a bullish breaker block. Yeah, this is a bullish breaker block that needed to take the market upwards. So this one is a bullish breaker block, a bullish breaker block. So a bullish breaker block is a failed bearish order block. Failed bearish order block. This is a failed bearish order block. A failed bearish order block means the market didn't respect that bearish order block. Instead, it broke it and went bullish, while people expected the market to go bearish. So it was not respected. So I hope you understand this. Yeah, so this now is the way you could have traded this. So most likely people entered a trade around this, entered a sell around this place, which was supposed to be a buy. But those who wait and are patient would have waited, and this is how they waited and traded. So if you have a look at this point, we had that point there as a shoulder, and this one as a shoulder, and this one came again as a shoulder. I think I should use I need a cyclic shape. I don't know if I'm gonna get one here. There we go. Okay, so we had an inverted head and shoulder, an imminent. So let's say this was the one plotted already on chart, but many traders were not seeing this one. Many traders were not seeing this one. So since you are not seeing that one, let me give it a gray color. So you are not seeing this one. They were not seeing this. So the market seemed to be going down, not only to realize that the market was coming to make this shoulder here, this shoulder. Then from the shoulder it sprang up and broke above the order block, and it went bullish. So I want you to have a keen look on what is happening here, and I wanted to relate it to what we are going to see in the other trend. So this is an inverted head and shoulder, small inverted head and shoulder on a 1 hour time frame. And if you come to where we are going right now, you should see a head and shoulder instead. Now you can see we have a head and shoulder, and now we are waiting for the market around this area, see? Yeah, around this area. As long as L is kept at 30-40, it's okay. So I think you guys have understood the importance of a breaker block and how you can trade a breaker block with a lot of caution. Yeah, so if you loved this tutorial, please let me know in the comment section and suggest what you'd want to see me do a tutorial on. And suggest what you'd want me to do a tutorial on. Let's meet in the next tutorial. Bye. Take care.